Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 978, and today's date is May 13th, 2016, and the title of the episode is U.S. Government Economic Recovery Illusion Misses the Mark Completely. Let's get right into the economic collapse financial news. Well, we can see again the market, it is not doing well. Gold is holding steady at this point. But we're getting a lot of economic information that's coming out from the U.S. government today. And what's very interesting is they're talking about retail sales. And we know all over the corporate media, they continually tell us about retail sales, how it's improving, the economy looks good, 2 thumbs up. But we have to remember and use some common sense here that many of the stores that are reporting right now are reporting that sales aren't doing as well. They're down. Now, there's a handful of stores that haven't even reported yet. And it's very interesting that the retail numbers came out today on a Friday to make everyone feel good that the economy is doing well. But 2 of the stores that came out were Nordstrom and Kohl's. And by surprise, their quarterly comparable sales, guess what? They're down. Kohl's is going to be shutting about 18 stores. Nordstrom's, they're laying off about 400 people because their sales have fallen by 1.7%. Kohl's has fallen by 3.9%. Now, we know that Old Navy, Banana Republic, The Gap, all reported sales are down. Walmart reported sales are down. Macy's has reported sales are down. Okay, so we get the picture here that many of the stores are reporting sales are down. And we know there's a lot more stores that are going to be reporting. Then the government comes out with their numbers, and they're saying, oh my God, in April we are having a 1.3% surge in retail sales. And we know back in March it plunged. But now, this is incredible. We are expecting 0.8%, and it's way over that. It's 1.3%. The economy is recovering. Everything is fine. Actually, this is the 3rd biggest month-on-month rise since 2010. So what is going on here? Well, let's think about this, and we'll use some common sense here. We know all these stores are reporting, and they're telling us that sales are terrible. We know thousands of stores have closed, laid off individuals, and all we're hearing is that retail is contraction. It's contracting quite a bit. But the government came out with their numbers telling us that everything is fine. Very interesting. Now, of course, as we know, they include gas and automobile sales in their numbers. Well, when we look at their numbers, and we look at them very, very closely, we see that autos, they moved up by 3.2%. Now, we discussed how they include auto sales in past reports. It's not when they sell it to a person. It's when the car is delivered to the lot. And if they channel stuff the lots, those are all the sales. Well, let's remove auto sales. Now, retail has only gone up by 0.8%. They met expectations. That's what they thought it was going to be. Now we know the price of fuel has gone up. So sales at gas stations, well, that increased retail sales by 2.2%. We're going to remove that. So sales really went up by 0.6%. Now, what's very interesting about this is that in this data, they didn't collect the stores reporting sales are down, and there's still a huge handful coming out. So most likely what we're going to see is a revised number going forward. Of course, when they do this, they don't go back and say, hey, we just revised the numbers, retail sales are down. And going forward, they're going to revise this number down. So the next month, it looks a lot better because we know there's a lot more sales. There's a lot more stores, I should say, coming out with their sales numbers. And do you really think they're going to be good? No, they are not. It's going to be absolutely awful. And we have proof that sales are not going as well because inventory to sales ratio is soaring. And we are almost at the point we were right before the collapse in 2008. Retail inventories rose 1% month on month despite a 0.3% drop in sales, leaving the inventory to sales ratio at cycle highs. So what we're seeing at this point is that these numbers are so manipulated that the government didn't even realize when they were putting this out, all of these stores were reporting negative sales, that sales have been declining. So again, who's lying here? The stores reporting sales are declining or the U.S. government? And once again, it is the U.S. government. Remember, think about all the people that have been laid off, all the people that are out of the job market, all the people who traded in, who didn't do it on their own, they were forced to do this, they traded in their high-paying jobs and had to take low-paying jobs. Well, if you add all this up, there's no way retail sales are moving up. And actually, if you use and you look at the retail sales year on year, sales have gone nowhere. Actually, they're in a downward trend. And you can see that graph on the X22Report.com site, or if you're on YouTube, you'll see it there. Now, what's very interesting at this point is that Symantec, they're going to be laying off 1,200 people, and we know there's going to be more tech job losses coming up, probably around 200,000 or so. We mentioned this in a previous report. But California, they missed their tax revenue by almost $1 billion. Now, there's a couple of reasons for this. Actually, the actual number was $869 million. Now, we know between the year 2013 and 2014, about 250,000 people moved out of California. We know that the wage growth has been declining. We know there's a huge amount of job loss, and we're seeing revenue go down. And of course, now Governor Brown, he has to change things up because, the economy is supposed to be doing very, very well. How do we have almost a $1 billion loss here in tax revenue? So we're going to see things change up in California. They can't spend the way they wanted to. And this is why the U.S. government central bankers are out there trying to get more and more revenue into the country with FACTA, GACA, and Obamacare and carbon tax, you name it. They keep putting taxes on everything because this is their last chance to bring in as much revenue as they possibly can. Because think about it, all these people out of the job market, people losing their high-paying jobs, getting low-paying jobs, people who are bartenders, waiters, waitresses, retail, those jobs are disappearing. Where's the tax revenue coming from? It doesn't exist. Now, of course, they keep blaming this on the consumer. The economy's not doing well because the consumer, they're not spending. And we know they're saving a lot of money. They're hiding it. Well, you have to remember, 1 in 5 families have 0 members employed. In other words, it is not a lack of desire to consume, but the inability to do so. And of course, we know that median incomes in the United States, as reported by the Census Bureau, they have been falling since the turn of the century, and it is now just a little bit higher than it was in 1995. So, what is going on here? They keep telling us that consumers are saving and saving and saving, and they have tons of money in the bank. Well, when you look on how they calculate this, their calculation is completely wrong on what people actually have in the bank. So what does the BEA do? Well, they calculate the savings rate as the difference between incomes and outlays as measured by their own assumptions. Assume, you know what that usually means. You can make an ass out of you and me. For interest rates on debt, inflationary pressures on presumed basket of goods, and services and taxes. What it does not measure is what individuals are actually putting into the bank savings or investment accounts. So in other words, the saving rate is an estimate of what is likely to be saved each month. This is not a hard number. This is an assumption on what it was back in the good old days, on people having jobs, what they would be saving. This is not the hard number. So the reality is, Americans aren't truly saving as much as the BEA is reporting. Why? Well, think about all the people out of the job market. Think about all the people that are being laid off, all the people that traded in their high-paying jobs for these low-paying jobs, because that's all that is out there. This is where the problem is. This is why everything is failing. But of course, they got to keep the illusion alive. So what we're seeing right now is everywhere around the world, people are getting out of the stock market. Everyone is still selling. Right now, this is the biggest monthly outflow from global stocks since the U.S. was downgraded. Europe, 3.9 billion outflows, 14 straight weeks, the longest streak since February of 2008. Emerging markets, 2.3 billion outflows, the largest in 16 weeks. The U.S., 2.2 billion outflows. Outflows in 4 of the past weeks. Now, what's very interesting, the inflows into precious metals in 17 of the past 18 weeks has been $1 billion and rising. So right now, the U.S. government, the central bankers, they're going to keep this illusion alive that we are in a recovery. They will never, ever admit that there is a problem. And from everything that we've been discussing, automobile sales, housing, retail sales, GDP, manufacturing, and everything else, all these numbers are completely manipulated. It is to distort what's really going on in the economy, and it is done on purpose. And the purpose is they need to keep the people here in the United States asleep as long as possible. Because if people start to realize that things are rapidly deteriorating, the U.S. government central bankers, they're going to be in trouble. Because people are going to say, okay, we've been following this for a very long time. Just like we've been doing here, we've been tracking it, we've been following it, we've been analyzing it. And we know at this point that the economy is not just going to crash out of the blue. This has been a buildup, and this is what people don't understand. It's a buildup over time. Bubbles are blown up. Bubbles will pop. The U.S. government keeps the illusion alive until the very last moment. And this is what we've been covering. And what's going to happen, we're going to come to that time when it all comes crashing down. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.